Dirty dealings, corporate battles, consumer woes. This is Evening 5. US software giant Microsoft Corp said on Thursday it would invest $2.2 billion or 10.5 billion ringgit over the next 4 years in cloud and AI infrastructure in Malaysia. The investment plan was announced by Microsoft CEO Satya Nadella during his visit to Malaysia at the Microsoft Build AI Day event. This marks the single largest investment by Microsoft in its 32-year history in Malaysia. Nadella said that Microsoft is committed to supporting Malaysia's AI transformation and ensuring it benefits all Malaysians. He elaborates that its investments in digital infrastructure and skilling will help Malaysian businesses, communities and developers apply the latest technology to drive inclusive economic growth and innovation across the country. Prior to the announcement, Nadella had a closed-door meeting with Prime Minister Datuk Seri Anwar Ibrahim at the AI National Leadership Forum in Putrajaya. In a Facebook post, Anwar said that he and Nadella had a dialogue regarding matters that touched on technology, namely AI and the government's plans to prepare the country for change in this area. The latest investment by Microsoft is set to transform Malaysia into a leading digital hub regionally while targeting to skill 200,000 Malaysians and powering up the nation's economic growth. These include establishing a national AI centre in collaboration with the Ministry of Digital to drive AI adoption across key industries while ensuring AI governance and regulatory compliance. Meanwhile, the Ministry of Investment, Trade and Industry said that the investment by Microsoft will firmly position Malaysia as a preferred destination for digital investments. Besides Malaysia, Microsoft on Wednesday announced that it will open its first regional data center in Thailand. Prior to that, Microsoft also said that it will make an investment worth $1.7 billion in AI and cloud facilities in Indonesia. Microsoft has pledged to train 2.5 million people in Southeast Asia in the use of AI by 2025. Lotte Chem Titan Holdings logged a net loss of 178 million in its first quarter, making it the group's 8th straight quarter in the red as product costs continued to exceed revenue. However, this was an improvement from the previous year's net loss of 224.8 million, mainly stemming from decreased share of losses from its associate company, Lotte Chemical USA, which offset the lower sales volume recorded. Revenue for the quarter did drop from 1.97 billion to 1.92 billion, which Lotte attributed to lower sales volume, but was partially mitigated by higher average selling prices amid strengthening of the US dollar against the ringgit. Moving forward, Lotte says that it is committed to a plant turnaround in the coming period, focusing on efficiency improvements, enhancing plant performance, and significantly improving plant safety. As for its outlook, President and CEO Pak Hyun Chul said in a statement that Lotte remains cautious in managing the business due to uncertainties arising from oil price volatility, petrochemical glut, and a slowdown in economic activity due to inflationary pressures and escalating geopolitical tensions. He explained that with an utilization of 65% in line with previous guidance, the group will focus on optimizing production outputs, implement efficient cost and cash flow management practices, and positioning the group for long-term sustainability. Concurrently, the construction of the Lotte Chemical Indonesia new ethylene project is progressing on schedule and expected to be completed by 2025. Upon completion, the group's total production capacity will increase by 65%. Malaysia's biggest port operator, Westports Holdings, saw its first quarter net profit improve by 11.4% year-on-year to 204.5 million thanks to higher container revenue coupled with higher finance income and share results of a joint venture. Revenue for the quarter rose 5.9% year-on-year to 543.2 million from 512.9 million previously on the back of an increase in container revenue. Westports saw container volume rise by 5% to 2.67 million 20-foot equivalent units, while it handled bulk cargoes amounting to 2.76 million tons. Westport says that barring a significant escalation of conflict beyond the Middle East and a sharp reduction in economic growth in many major developed economies, it is cautiously forecasting a low single-digit growth rate. However, it added that the prospects of stable or lower rates in the current year could provide some buffer to consumers' containerized consumption. Chairman cum Group MD Datuk Ruben Emir Nyanalingam Abdullah said the Red Sea Sea developments have a marked influence on container shipping, and its Asia-Europe trade lane experienced lower volume as liners adjusted their routes. But he adds that the adverse effects should taper off once services have been regularized. This year marks Westports' 30th anniversary, and it has embarked on the Westports 2 expansion program. It also remains committed to maintaining Port Klang's position as Malaysia's premier gateway port. Protasco, which has businesses ranging from hotel to engineering, said it has received an offer to buy its unit Ikram Education, which owns Infrastructure University Kuala Lumpur. Shares of Protasco surged following the announcement and gained as much as 10% to 27 sen, its highest since December 28, 2023. The stock eventually closed 8% up at 26.5 sen. Hong Kong-based Star Teenagers International Group has paid an unspecified earnest deposit for the acquisition. STI will have 3 months to conduct due diligence on Ikram Education. Protasco said that a detailed announcement regarding the proposed disposal will be made upon execution of the share sale agreement between the parties. The group's education segment has been loss-making since the COVID-19 pandemic as the student population fell. For FY 2023, the education segment reported a net loss of 9.03 million, which was an improvement from FY 2022's 15.3 million loss due to lower lecturer fees and lower operating expenses. Revenue for FY 2023 improved by 3% to 25 million on the back of higher international student fees and franchise fees. At a group level, Protasco saw a turnaround with a net profit of 6.5 million as revenue surged 28% to 1.13 billion from 884 million previously. Feytech's Holdings' initial public offering on the main market is offering 252.94 million shares, including an offer for sale of 109.62 million at 80 cents apiece. The automotive cover and seat manufacturer is scheduled to be listed on May 21st. The IPO will raise some 201.6 million, of which 87.69 million will go towards two existing shareholders, Tan Sun Sun and Goh Yong Cheng, both of whom are executive directors. It is also issuing 143.32 million new shares to raise some 114.65 million ringgit. At its prospectus launch, Feytech shared that about 10% of the gross proceeds will be allocated to part finance the acquisition of land in the Klang Valley and 18.4% for the construction of a new corporate office. In addition, 16.4% will be used to construct a new manufacturing plant and supporting buildings, while 2.6% will be for the purchase of new machineries, which include 75 sewing machines. Established in 2002, Feytech mainly manufactures automotive covers for the OEM market segment, of which its customers comprise Mazda Malaysia and Kia Malaysia, as well as Tier 1 automotive seat and interior part manufacturers that service automotive vehicle OEMs for brands such as local OEM, Mazda and Hyundai. According to its prospectus, the board plans to distribute a dividend of at least 40% of its net profits for each financial year.